Hi, you're watching Investor Insights, and in this video I'd like to discuss Australian banks and the real estate market in Australia. First things first, real estate in this country is overpriced. I don't care where you are, I don't care if you're in a capital city or an outlying suburb, doesn't matter. Real estate is overpriced. What methodology do I use to work out that real estate is overpriced? You can use a multitude of factors. You can use, for example, rents. Now, house price should be a function of rent. Now you've got the median, for example, house rental value to be rental yield to be about 4.5% in Sydney. Now, if you bought a property for $1 million and you were renting it out for 4.5% a year, and you've got inflation running at 2.4%, which is an absolute lie, by the way. I reckon it's closer to 5 or maybe 10%, judging from how oil has skyrocketed of late. You're probably losing money in terms of real income, because if inflation is running at 5% and your income yields on your rental property is 4.5%, then you're losing 0.5%. Why would you bother investing in something that's going to lose you money? Forget even mentioning the word negative gearing, because I'm going to throw up every time I hear that word. The housing market has been sustained by the RBA through its low rates. You always hear about we always need more properties, we need more houses because we've got more people coming in, we got a population explosion. They can mention all sorts of things. But the fact of the matter is that house prices should be a function of rents. And with rents, the ratio being so high, something's got to give. And it's going to be house prices. It's not going to be rent. Because there's a level where rents get up to and people just don't bother renting anymore. And just as there's a level where house prices are just getting so high that people just find it cheaper to rent. And me, myself, I would recommend people to rent rather than buy a house at this point in time, despite having all-time low mortgage rates available in this country. It doesn't make any sense. And this discussion is going to flow onto the impact of the housing market onto Australian banks. And this is a very controversial issue. And a lot of people would disagree. In fact, most people would disagree. But when the crap hits the fan, I don't want to be the guy who's just the sole person who's going to be standing out there saying, man, I told you so. But Australian banks are going to lose a bucket load of money. Therefore, the shareholders are going to get crushed. How, you may ask? Well, when you have an overpriced asset and you borrow most of the money to buy that asset, for people to buy those assets, and those assets just come crashing down in price, then you lose a lot of money from losing your capital. No bank can get away from this, because mortgages is such a large proportion of banks' incomes. that I don't see a way out for them. They have to lose money when this market implodes, and the shareholders, just as I said before, is just going to get squashed. Now, a question you may be asking is, how do you think the bank is going to lose money when they're demanding 10% deposit, 10% of the capital value of the house? I mean, they have that. In this country, you don't have any ninja loans like they did in the States. The subprime loans where there was like no income, no job, no assets, ninja loans. You don't need to be issuing subprime loans or whatever to lose money. The American banks lost money on their prime loans just as bad as they did on the ninja loans. And how are Aussie banks going to lose money if they've already taken down the 10% deposit on most houses? Well, it's very simple. House prices aren't going to fall 10%. They're going to fall a lot more than 10%. So the bank's capital requirement of 10% from real estate mortgages is not sufficient enough to cover their losses. So if I was to give you an example, it'd be very straightforward. You're going to buy a house for $500,000. The bank expects you to cough up 10%. They're going to loan you out the rest. So you're going to put in 50 Gs or 50 Ks, and the bank's going to give you 450K. It's all nice and rosy. But the market suddenly turns, and this is a matter of when, not if. And property values catch up to the fundamentals, and they fall, for argument's sake, 30%. Your 50 Gs don't exist anymore. It's gone. Because whatever happens, you owe the bank 450 Gs. But you know what? Your property's fallen 30%, and it's only now worth 350 Gs. You now have what's called an underwater mortgage, where the value of your property is worth less than what you owe on it. So the property is worth 350, you've outlaid 50, and you owe the bank 450. You're just going to say, you know what, the hell with it. I owe more than what it's worth. I don't see the point of paying it off. Here's the keys. Goodbye. Sure, your credit rating is going to get crushed, but you don't care because there's no sense trying to lose another 100 grand. You've already lost 50. What's the point of losing another 100 grand and subsequently more if you keep on paying your mortgage? So best to cut your losses short and walk away. As unethical as this sounds, it's the financially correct thing to do. You've got to protect yourself. Now, let's deal with the banks. They've loaned out 450. The property is worth 350. The fact that they're holding 50 Gs of yours doesn't even come into consideration. They don't give a stuff. They want their 450. They're not going to get it because the property is only worth 350. And when they try to sell it en masse with every other bank that's out there trying to get rid of properties to get their money back, this causes an implosion. And the banks basically have to write off 100 grand if they're lucky. Does this remind you of a situation that's happened just in the past 5 years? This started the global financial crisis. The real estate market in America was overheated. All the speculation, all the excesses caused the market to exponentially get up, and as quick as it got up, it fell down twice as quick. And it killed many investors and mums and dads and every other bank that was out there, it took them with it. The banks had to write off trillions. And this is why I'm telling you, the Australian banks are not immune. And these all-time high prices are going to get crushed. I don't know when this market's going to retreat, but let's just say I would rather rent than go out and borrow money to buy a house. You're going to save $1 squillion out of this. Your credit rating is not going to get hurt, and the bank's going to thank you one day because you're not going to lose them any money. So to recap, Australian banks, just like American banks, are going to lose a ton of money, because this real estate bubble that you're experiencing right now in Australia eventually is going to come to an end, and prices will catch up with fundamentals. And probably the biggest trigger for this will be a hike in rates by the Reserve Bank, because inflation is skyrocketing. The American banks weren't stupid, they just got greedy. Just like these Aussie banks want more business, and greed clouds your judgment. When Armageddon comes, just like the American banks, the Australian banks are going to get crushed. So if I were you and I was looking at investing in Australian banks, man, I wouldn't go near them. If you already have some and they're at all-time highs now or thereabouts, I'd look to sell them. Don't worry about the taxation implications. Be concerned about keeping the winnings that you've made and cutting your losses short. So until next time, I wish you many happy returns. Avoid the Aussie banks and avoid buying expensive housing, and happy trading.